right, welcome everybody back to my Bank It or Tank It YouTube series where we're going to run through a couple stocks every other week or so and give you my quick take on whether or not you want to bank on these stocks going higher or they're set to tank and head lower. And look, the Fed is still all consuming the news in the media right now. The markets are just hanging on their every move, and what we had last week or what we had earlier this week was right in line with expectations. So I'm not going to dive into it much today. The market speaks for itself. We're going to pull up a chart of the S&P 500, just take a look at the bigger picture real quick, and then I got 4 stocks that we're going to dive into. But first, look, I launched a brand new service here coming out in 2023, and it's a light but fun one. Introductory price here that you can get and take advantage of is going to be expiring January 1st, 2023, because I want to kick things off for the new year on a solid footing and pull as many people as I can, because I think 2023 is still going to be a great trading environment, a lot of volatility, a lot of big moves, and a lot of great opportunities, and we're going to be there to take advantage of it. And an easy way to get in on this with an entry-level position that we're going to be able to hold your hand throughout the entire way, because we're only going to trade one trade at a time. Watch it like it's our only child. You know, nurture it, take care of it, just make sure that this thing's on a path to success here over 2023. And if that sounds like something you're interested in, check this out. My Money Stack Challenge, $5K to $100,000. That's the goal of turning a small amount into a larger amount. The numbers are really irrelevant. I just want to get that picture across that we're trying to grow a small account portion of your account, roughly 5%, and grow it into as big as the rest of your portfolio that you would be trading. So 5% to 100% of your portfolio. You just start with that initial small amount. I'm going to show you how you can stack it throughout the year and how it's all possible when you sign up for my Money Stack Challenge. So we're trading options. You can click up here to sign up now. We're trading options, one option at a time, to move us through the entire year and show you how you can stack your gains from one trade to another. And we're going to be watching it closely, because I know options can lose money too. I'm not saying that we're going to win on every single trade, but we're going to be watching it like a hawk to where we get some small losses. We're going to be able to trim those losses and then go into more profitable trades. And it's going to be a fun one. I'm doing it completely discretionary, not hung up on a system-based approach, because that needs a large volume of trades for that to work. So we're going to be doing this completely discretionary based on what the market's giving us and based on what I'm seeing in the market and analyzing with these types of trades. So it's going to be a fun new service that I'm really excited about launching. So remember, click up here so you can sign up today, take advantage of this introductory price before the price goes up January 1, 2023. So check that out, the Money Stack Challenge. Now, let's pull up a chart of the S&P 500. Here we have the big downtrend that we're still in. That's clear. So we had this pullback yesterday. The market's still pulling back from the Fed meeting. And it feels like we're in another free fall almost. But then when you step back and you look at this chart, you can see that we can still be in this upward price trend here in the short term. And if it holds on to this, I mean, that's great news. This stocks could break out to the upside of this pretty easily here in the coming weeks ahead. Maybe a Santa Claus rally. You know, I mean, I'm bearish overall. I am staying bearish. I think the stock's going to go lower in 2023 for sure. But, you know, I take what the market gives me and what I see in the market and the trends that I'm seeing. And when I look across the board at a lot of my bullish trades, you know, they're still holding up. They're not falling through the bottom yet. They're not falling, you know, that sharply here, even on the moves that we're seeing. So it's not giving us a reason to panic just yet. And we're going to stay with this one. You can ignore my dogs. If you hear them barking, they're just going to, you know, continue to bark at whatever noises they hear. All right, so the S&P 500 holding up, not in a complete free-for-all, and maybe potentially about to break out of this downward trend that we've been in. So that's something that we want to keep an eye on. Our first stock that I want to take a look at is going to be Costco, C-O-S-T, ticker symbol, the wholesale giant with the warehouses. Here, I'll pull up the right stock chart. Now we have the RRG candlestick shaded that we can look at that. You see that it's in the lagging. It's in the red down here. It's near support. And you could have drilled this a little tighter and said that was a breakdown. But you can see that where we have it in now, we're still touching the lows, touching the low on a candlestick, and then we're at the low of where we are today. So this wedge pattern looks like it is still intact right now. I'm not saying that it's breaking. I have a price alert set up on the downside, price alert set up to the upside. For those of you in flash alerts, these are the trends that we look at. And then once it breaks below this, we want to go bearish. When it breaks above this, we'll turn bullish. So today, seeing that it's in the lagging, holding above the support, I'm going to throw this one on my bank it list because, well, Costco, the shares seem to be holding up. I mean, we saw it go through this lagging quadrant, which tells me next that I would expect it to go to improving, which is blue, and then leading, which is green, and that's the one that can really carry it back up to this upward level of the trend. It's also in the wedge pattern, which is a consolidation pattern, and when you look back at the trend that the stock has been in before this pattern formed, it's in a broader uptrend, big move higher here over the last couple of years. Now we're in this wide consolidation, and what you typically see out of these are continuation patterns. Now, we're in a bear market. Maybe that doesn't play out just like it typically does, because most of the time we're in a bull market. So that is something I'm going to be keeping an eye on. But for today, holding above this support line, we're going to put it on our bank it list. But don't worry, if it breaks below this green support, we'll turn around and we'll buy put options on this stock to continue to trade it. Next stock is Align Technologies, ALGN. So this company's been creamed. I can zoom out and you can see that the bubble that it's gone through here since the pandemic, 2020, really shot up. I mean, over $700 a share. Now we're back down to roughly $200 a share, and we got some key levels that we want to keep an eye on today. So when you look at where the stock is trading, it's bouncing around. It looks, when you zoomed out, I mean, it looks like it's trading around zero at the bottom of the floor, but it's not. It's around $200 a share. It's got plenty of room to the downside. So this green support is going to be my main level to look if it's hitting a new low. We're going to get an alert, and I think that we want to go bearish on that move. But this little dotted line, I hope that comes up. But there's a dotted line here at 220 because that's the high that we had from this push higher after the gap lower. So this looks like a key level. So if we get back above that and the closing above it, I'm going to go bullish and expect it to run up through this red resistance line here as an uptrend could begin to form. So I'm going to be keeping an eye on that here. For Align Technologies, not all out bearish, but yes, when we look at the chart, it isn't pretty. It's definitely in a downfall. We're trying to create a bottom here and go higher, but until that's actually formed, we're going to have this one on our take it list. I expect shares to go lower. Ultimately, we have a price level that's going to give me an alert. That's a key level that we want to take action around. So that's what we're going to be watching for Align Technologies. Now, next up is Adobe. All right, so this one's a little more clear cut. I mean, it's still in a downtrend, so I bet you can go ahead and guess. We're going to throw it on our take it list. I don't like to mess with stocks that are beaten down. You can see that it's bouncing around in this uptrend. It's in the leading quadrant now based on the relative rotation graph, which is comparing it to the S&P 500 and telling you where the stock is relative to the S&P 500 as it continues to move. And right now it was leading it. And what we expect to happen next is that it weakens, goes into yellow, and then lags in the red. And that could easily pull it back down here to the support line, maybe even lower. Had a big gap down here, and it's on the flip side, we have a potential to close the gap up here around $370 and then crash from there. So that could be in the cards here. This is why this orange level is going to be a key level that I'm watching here in the short term. If we break below it, I'm going to go bearish. Once we get back above it, I'll go bullish, and I'll flip-flop around this key orange level based on, how the prices are trending. But I think that this is going to be where we see the runs kind of set up from, because this is where we're getting a lot of consolidation and a lot of support here on the stock to the upside. So on the flip side, I think there'll be a lot of resistance as the stock, if it breaks below this and tries to come back up. But for today, on my take it list, we'll be looking for those opportunities as they get triggered for folks that are in my flash alert system. Next one, Richie Bros Auctioneers. I always like, when we see a pretty key trend there where stocks that are falling, getting beaten down, which in a bear market, that's the case most of the time. So I want to break that mold a little bit and find another stock here that's got a different setup in it, because when we zoom out of this one, it's not in a free-for-all. It hasn't, shot up to $700 a share and now it's trading around 100. It's been in this wide range for the better part of 2 years now, holding up, not giving into going back to the 2020 lows or anything like that. It's trying to stay up here. A big gap lower that we had from back here in November. And again, very similar to what we just looked at, though, trying to close that gap. Got kind of this mid-range support that we want to keep an eye on. And then a lower level support, that's when the bottom's falling out. That's our big long-term support here, that if we get below that, look out, this thing could really tumble and head back down into these low 30s that it was trading at, during the pandemic and before then. So that's what we'll be keeping an eye on the downside. Some potentially bearish momentum building up here. It's leading, but it's falling. Came out of the lagging quadrant, went to improving, and now back to leading, and the stock's really gone nowhere. So that's not the best thing to see. We could see more weakness here. Once we get below this highlighter green support line, we're going to turn bearish. Today, we're going to have this on my bank it list, though, because you can see this price pattern is very broad. We're at the lower end of this price pattern. So if we can hold up into this channel and get a breakout above this dark red resistance level, then we want to go bullish. We could be running right back up here. This, I mean, it's been going on for a couple of years, this descending triangle pattern. As long as it continues to hold up, we want to continue to trade it, especially on the fringes, and kind of catch some of these runs. So that's all for Richie Bros today. Richie Bros is on my bank it list. So 4 stocks, quick look at them. Talked about the overall, the S&P 500, but don't forget to click up here and check out my money stack challenge as we look to kick off 2023 with a bang and get things rolling. I think it's going to be our most successful year yet for a trading wise and profitability, because we're just getting settled into the trends, into the volatility. Last year was really all about, or 2022 was really all about the transition from 2021 to 2022. 2022 is when the bear market took hold. So now that was the most difficult time of the year for trading it, because you're still kind of stuck on, are we in a bull market? Are we in a bear market? Are we still buying the dip? What's exactly going on? So that was a difficult period. Now we know volatility is the norm here. We're not out of this. 2023 is going to be a very volatile period. This is going to be the year that really makes or breaks this bear market on as to whether or not it's a, you know, kind of a one and done, 1 year down and now we're out of it, or 1 year down, now we're just in this chop, which is great for traders. You know, it's easy once you know that you're in this. You just do mean reversion. We're going to be looking for things to reverse, kind of like we're doing with some of these charts here, looking at these quick moves to give us a signal to the upside, and we look for things just to run back up and stay kind of in this choppy trend that they've been in. So that's kind of how we're going to be trading it here in 2023 as we get ready for the new year. Just be sure to check out that Money Stack Challenge, so that way you can join the team and we can all kind of go together and walk through one trade at a time and do it throughout the whole year 2023 and see how big of a result we can turn that into as we nurture and really take care of this one trade. All right, so that's all for today. Until next time, I'm Chad Shooter.